The drop in the price of oil is rattling investors who are still shaky after a rough run last week as coronavirus fears continue to put pressure on markets. Joining us now with more is Aquiles Larrea, founder and CEO of Larrea Wealth Management. Thank you for being here. The question I think people ask you, how do I protect myself? How do you advise your clients in a market like this?
In a market like this, obviously, you have some challenges that are going on, especially with the potential oil price war with Saudi Arabia and Russia. So you want to first say to yourself, let's put things into perspective. You know, we saw a trigger in the market after that 5% and went down as low as 7%. I've been telling my clients, first thing is you have to digest the news. This whole thing with the oil war, we just realized this, 7 o'clock last night, and we're getting the information now. So we need to put this a little perspective. We got to digest it and move, not slowly, but make decisive moves and strategic moves into areas that we feel could be advantageous going forward. And some of the new areas that we're looking at, obviously, municipal bonds and some stocks that have really been beaten down because we love bargains. We're a bottom-up investor. We want to find bargains in this type of market, and there may be more to come.
You are not the first person to come on today and make comments like this. We had an investor on earlier who's a longer-term investor who seemed more optimistic over the long run. And we've heard a decent amount of that over the past couple of weeks. Who's doing all this selling? Where's this coming from? Because it's not coming from people like you, seemingly. Is it big institutions? Is it traders? Because there's a lot of volume behind it. Who's doing it?
That's a great question. You know, the funny thing is that a lot of traders who I've talked to have said, hey, I'm kind of using this as an excuse to get rid of some long-term gains that I've had. So they're not saying it. Mutual fund managers won't say that, but traders under the radar will absolutely say that because they want to get rid of some great stocks that they've held. You know, some things that they've had 42% gain on and haven't been able to get rid of it because it hasn't reached that long-term capital gain area yet. So that could be one of the places. Other places are just simply that they've made some quick gains and they want to get out. But then you have the other part where it's just ugly. You know, I'm going to call it like it is. It's ugly in some places, and it's not going to get better right away. You know, we might need a couple of weeks. When SARS happened, it took, 2 quarters recovery in China. So we could be seeing a year on this versus 2 quarters.
So what are you advising your clients to do? What should they be selling?
Well, we're definitely doing the first thing that I mentioned. We're selling those amount of stocks that have made over a threshold. In our particular case, we're looking at over 30%, and we are taking some of them off the table. But are
there particular sectors though that you're looking at, or you're advising to look at individually?
I would look individually, but I would definitely look, you had the Carnival cruise lines and you made 10, maybe 11% in that in a very short period of time. It did not participate in the broad upward trend of the market as a whole. So we took our quick profits from there. I'm also advising my clients on a long-term basis that this is still a blip on the radar screen because a lot of my clients, talking 20 to 30 years, some of them have been with me 25 years, so they know that this is just a short-term event with a lot of potential to pick up some really high-value, high-quality stocks.
It may be a short-term event in terms of the outbreak and the effect on it, but we're looking at also, comparing. For SARS was one of the comparisons, but also now we've, had discussions about comparing it to the recession and what that was like. Is this a once bitten, twice shy situation where there's some people just sort of fleeing because they don't want to relive what they went through before?
Well, that's a very good question, and the truth of the matter is depends on the client. Some people are super skittish and they want to sell out all their, the sky is falling and the sky is black and they want to get out. My clients and I personally take this, hey, let's not jump to any conclusions. Let's start to digest this a little bit. And if there are needs for adjustments and sells here and there, we're going to do so, and we're going to do so pretty selectively.
What kind of screens do you use to identify value? I mean, you were talking about bottoms up, and what's appealing to you? Is it dividend yield, but then that's going to lead you right to Exxon, which might not be a great thing to buy. Or maybe it is. I don't know.
Well, we're the kind of bottom-up value buyer that looks for stocks, high-quality stocks that have been beaten up. We do look at dividends, and we also look for a certain price point. Say, for argument's sake, we saw certain stocks going down 20% this morning. That's a buying signal to us. We're not afraid to go in there. As I mentioned, experience teaches you, and that's the one thing. We'll go in there. We'll pick up some really high quality names. We're not afraid to do that, and we benefit our clients in doing so.
All right. We want to thank you, Aquiles Larrea, founder and CEO of Larrea Wealth Management. Good to have you on the move.
Nice being here.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.